The topic that we're covering today is Chapter 12, which is Corporate Valuation and Financial Planning. And we're not going to do every single bit of it, but we'll talk a little bit about the key aspects of this chapter. Those being some of the tools that we use, such as additional funds needed and sustainable growth rate. These are simple tools that we can get a quick feel for how the company is looking going into the future. For example, if the growth rate is going to cause a major additional funds needed figure, we may have to take a pause on what can we do to enable us to be able to fund our ambitious growth. The other approach is to say, what percentage growth can we do that is very comfortable for the company, knowing that if we exceed it, we may have to do some other things to deal with the excess growth for the following year. So those are AFN and SGR. Then we're going to look at forecasting, and we've done this on various bases in the past, but we're going to go through a fairly detailed example, how we could start with some data, make assumptions, get to forecasted key figures, use those to generate estimates of free cash flow, then use free cash flow to do evaluation. Following that, we're going to use the same data to see the projected income statement and balance sheet to see how it's going to look for the next year. Again, this is just an example touching the major steps that a CFO would do with his or her own department, and a lot of other effort from people to get an accurate financial forecast, since that's a critical aspect of the company to make sure the planning is sound, and furthermore, that there is the capital available to pay for all that growth that is about to come from the ideas from the company. So let's jump in. We've seen this flow chart, specifically the bottom one, where we look at the classic valuation model based on free cash flow, where we take the free cash flow projections year by year, and we discount it based on the weighted average cost of capital and get our valuation. But on the top, we're seeing the details of what comes before the free cash flow. We're looking at how do we create them using forecasting of operating assumptions. Then we project income statements, see if we have enough money, projected balance sheet, and then ultimately end with what we believe to be the free cash flow estimates for the company. Then on the right side, we see that this will then tie into what we have as far as how we would deal with the excess cash that may be generated or the deficiency in cash if we need more cash. That falls into our model along with weighted average cost of capital to then come up with a valuation for the firm. So those are the general steps in a diagram fashion. We'll jump into it at a detail level in our exercises in Excel. The example we'll be using is Hatfield for 2017. We're given the data for Hatfield in 2016. On the left side, we see the balance sheet. On the right side, we see the income statement and some other information about dividend and the common shares outstanding and the stock valuation. So we have some data, pretty simple data. Again, we're just touching on the top of what you would do in a real life scenario. The first thing we're going to look at is, well, how are they doing? One of the methods we used, and we used this even back when we studied accounting together, is we're looking at Hatfield's ratios compared to the industry, just to get a feel for how they're doing, because that's going to inform our assumptions about the future. This is going to be our first exercise that you're going to do using Kahoot. But just to orient us, we have two columns of ratios. Some relate to the balance sheet, some to the income statement, and some tie on the right side to what we see later on using the DuPont formula. So this is a fairly broad set of ratios that one might do analysis of a company. So now it's your turn. You're going to go to the Excel worksheet, and then first we're going to set up Kahoot, which again is in the first tab. So get yourself logged in, and then when you're logged in, you'll see a series of questions, and those questions relate to the sheet that we have right there. So in the tab, in the Excel worksheet, you'll see this display, and then in Kahoot, you'll see questions on those displays. And it's pretty simple. Just for example, it's going to ask, well, how's Hatfield doing compared to the industry as it pertains to operating costs to sales ratio, things like that. So this is to warm you up. So go ahead and go into Excel, load yourself into Kahoot as your nickname, and then proceed on questions 1 to 13, which is covered in that tab labeled, guess what, Q1 to 13. So take a break, or I'll take a break, you do some work, and then we'll reconvene when you're done with this.